Stacking surfer, I think I'm your best friend. Balances in your bank and stack.
The difference between a settlement currency and a reserve currency is, if we look at the petrodollar, the deal was you'll settle all energy in dollars, and then the excess you will put into our bond market, i.e., reserve, and you will take that excess currency, and in order to remove any volatility, if you will, and decrease liquidity, you put it into the U.S. Treasury market, which forever has been, the most stable liquid market on the planet. But from a historical context, I think it's fair to note that, government debt has a very small history in a larger context as being considered wealth. And, last year marked the first year in 45 years where gold had less volatility than the 10-year Treasury. And what that is to me is these countries like China, like Russia, like Saudi Arabia, realizing that they can find perhaps greater stability ultimately in gold rather than in U.S. Treasuries without funding the beast, so to speak. So we see selling of treasuries and moving to gold. So the bottom line is simply this. I think what you will see at first is a settlement currency. What we are seeing right now are all of these countries trading in each other's local currencies, trading with one another using their currencies. But there is no doubt in my mind that we will see a settlement currency backed by gold, or some form of commodity-backed settlement currency, as the Russian finance minister has been saying for a very long time. And if you look at gold being the only other tier one asset and the central banks buying more over the last 2 years than at any time in central bank history, certainly makes sense. But what do you do with the reserves? What do you do with the excess, rather? The excess, right? So I think it will be moved into things like tangibles, like gold, like copper, like silver, like rare earth metals, like any commodities, any tangibles. Zoltan Pozsar, who used to work at the New York Fed, understands the plumbing of the whole financial system better than anyone, calls this Bretton Woods 3. Bretton Woods 1 was at the end of World War II when we took over for the pound sterling, backed the currency by gold. Bretton Woods 2 is when we cut the gold standard in 71, delinking the dollar, and then the informal pegging it to oil, the petrodollar. That's Bretton Woods 2, and he calls us Bretton Woods 3, a system that will be predicated on commodities and transparency. This is the marriage between blockchain and gold. Yep. This is how you gain instant credibility amongst a union of countries that the West may not, or even their own allies, their own members of their own group, don't fully trust yet. But I do think that that's where gold and blockchain come into play. And if I had to guess, when the music stops, when this new system is brought forth, after it has sufficient mass adoption, critical mass, if you will, that there will be a commoditized crypto or blockchain-based currency to settle in.
There's just a lot going on right now. There's a lot of change that's happening. And so we're starting to see a lot of different things happen. We're seeing things happen to the precious metals. We're seeing things happening to the crypto market. We've had new laws that are affecting real estate, at least commissions for the agents. We're seeing a lot of things going on with banking, some new banking rules that are coming out. So there's a lot of things that are kind of in motion right now that seem to be making some drastic differences. And I think every time we do this once a month, pretty much, there's just enough that goes on in the month that we see differences.
Yeah, and like I said, I really do enjoy coming here. I've enjoyed our conversations, and I would say to you that over the last 3-4 years, I don't know if it's the same for you and everyone else out there watching this, but life seems to be spinning at a much greater clip. Things seem to be moving much, much faster. And it seems when we were young that, maybe we were just young and didn't notice it, but I don't think so. I mean, I think that material events didn't happen as frequently, and when they did, they got much more attention. And now we see all of these things happening all over the place every day, more and more and more. We're inundated with it, and it's in one day and out the next and forgotten. And, it's crazy to me. I mean, something even as you look at the reason the special prosecutor didn't move forward with the I guess you would say the charges or the investigation on President Biden, because he said he was too feeble and too old, and yet he's running again to be the president of the United States for the next 4 years. And if he's too feeble and too old to be, to stand trial or to further an investigation on a special counsel, then how is it that people have forgotten that already and yet are okay with him being the primary candidate to move forward for the Democratic Party? How are they okay with him running the country? Things like this would have never been forgotten, and yet it's just swept under the rug and forgotten about. And that's maybe a poor example, but it's these things that continue to happen that in years past would have gotten far more attention. And maybe that has a lot to do with the left-leaning media that doesn't really report anything anymore. All they seem to do is create divisiveness. And I find it to be very disturbing, actually, more so than the economics of things is what's happening in this country on every front. And it seems to be moving faster and faster and faster. And look, with the big BRICS meeting in October, the election in November, everything leading up to it, I have a feeling that this is a trend, this craziness every time I come on, that's only going to get crazier.
You can make some predictions on what might happen, and you can also make some predictions on when it might happen. It's really hard to get both those things right.
Look, I mean, you got to be out of your damn mind to be naked short in the silver market right now. And I think that you could argue that this is the gyrations of commercial banks that are trapped, that are getting squeezed and doing all they can to knock it down to cover their stale short positions. What we've seen is tremendous resiliency. Before, man, when they would step on it, they would step on its nuts and really step on it, and then its neck, and it would never come back, and it would take forever to come back. And now what you're seeing is immediate bounce back, wasting of ammunition, only making the ultimate outcome like a coiled spring or a beach ball. You push further and further and further underwater till when it gets past your hand, it knocks your chin off as it comes up. And that's the kind of demand that I would expect to see when you see a sovereign nation like Russia say this. I would argue India and China have been doing it without saying it. India has imported over 800 million ounces of silver in the last few years and really has been very quiet about it. China is the second largest producer of silver in the world, and maybe they're the largest. I mean, who knows how much they actually produce. But now, as we've talked about on your show, they're flying all around the globe and buying concentrate and doré bars, largely in Latin America, from the miners directly, disintermediating the marketplace, the commercial banks, and the exchanges, which provides cover to their acquisition, paying double what the West will pay for unrefined sludge, in essence, and bars that are crudely refined by the miners before they get full refined by the refineries. And that is indicative of the demand for silver. The Citibank, their lead analyst, Max Layton, he says, look, silver's up 35% so far this year. It's leading the silver or the metals complex, but that they expect it over the next 3 months to $35 and 38 or higher over the next 6 to 12. To me, those are conservative, very conservative. But this is a game that won't end well. You can't trade 2.9 billion ounces of silver per day in London, which is 3.5 times annual global mine supply, on this leverage, ridiculous scam of an exchange, without running into some serious problems when you have these sovereign nations standing for delivery. In the month of August, 8.1% of the entire silver float in London was delivered. So the only reason they're able to get rid of or get away with this, in years past, they got away with it because the countries that are now draining the exchanges, using our suppression against us, who are now wise to the game and therefore quiet to the stupidity of the West, keep it as quiet as long as they can and just pickpocket whatever they're stupid enough to short. was they weren't coordinated or sophisticated or motivated enough to do it. They are now, and that's how they win, where 8% is delivered off the exchange, where this is a continuation of what we're seeing all around the globe. So ultimately, silver goes higher than anyone thinks possible. When you add into it, for the first time, a government officially saying it will be part of our reserves, this is a big deal.